A very good morning and a happy Friday. Welcome to today's episode of Morning Well. We'll talk about three things: tech gains as yields cool off, ECB minutes, and international tax code, some developments on that front. The tech-heavy Nasdaq gained 1% after a slip on Wednesday. The sector seems to be gaining momentum after repeated assurance from the Fed that it would continue with easy monetary policies until the economy recovers further. Fed Chair Jerome Powell hammered this point home again on Thursday. Bond yields are subsequently cooling off and easing concerns that growth stocks are overvalued. Some large gainers included Etsy, which surged about 5.6%. PayPal was up 3.5%. Large tech names rallied as well. Apple and Microsoft were also up 1.9 and 1.3% respectively. The S&P 500 was higher by 0.4%. The Dow Jones was higher by 0.2%. Fed officials have reiterated this week that they intend to continue with easy monetary policies until the economy has recovered more. And Chair Jerome Powell expressed concern Thursday over long-term labor market scarring and assured continued support for those out of work due to the pandemic and subsequent recession. It's important to remember we are not going back to the same economy, he said. This will be a different economy. More comments: Jerome Powell is more concerned about rising infections than rising prices. The recovery here remains uneven and incomplete, he reiterated to the IMF virtual panel. The world won't be able to fully resume economic activity until the virus is controlled everywhere, he said, while urging people to get vaccinated. Powell reiterated the central bank's view that an expected spike in inflation will be temporary and the officials have the tools to deal with it if need be. In the bond markets, the yield on the 10-year Treasury note declined to 1.63, down from about 1.65 on Wednesday. Remember, the yields were at about 1.75 at the end of last month. The cooling off in bond yields has led to a revival in the largest tech stocks. Apple, Microsoft, Amazon, Google, the biggest companies by market value in the S&P 500 have each climbed more than 6% this month after stumbling in March. Jobless data was released yesterday. The latest data of jobless claims showed that layoffs rose for the second week, highlighting the unevenness of the recovery. Worker filings for initial unemployment benefits rose to 744K last week from a revised total of about 728 the prior week. The street was expecting a decline to about 694K. We got the ECB minutes as well this week after we had the Fed minutes a couple of days ago. ECB policymakers discussed a smaller increase in bond purchases under the PEPP and agreed that the central bank did not need to use the envelope in full if favorable financing conditions could be maintained. Also, officials noted that the pickup in nominal yields reflected almost entirely markets' reappraisal of the inflation outlook, while it was argued that higher real rates were not necessarily a cause for concern and should not trigger a policy intervention if they reflected higher growth prospects rather than higher real-term premium. Last month, the ECB said it would conduct emergency bond purchases at a significantly higher pace over the April and June period, aiming to bring government bond yields down and support the Eurozone economic recovery. Lastly, the Biden administration has floated a compromise proposal to counterparts around the world that could apply a new international tax code to at most 100 global corporate giants. The US plan would consider a company's profitability in determining whether more of its income should be taxed by the countries where it does business, something the Biden administration argues will resolve long-standing disputes about which companies should be targeted by the new global tax rules. This is according to Bloomberg. The aim is to target those companies with the highest profit-shifting potential, is what this document says. Is interesting developments around this space, especially on the taxation bit. Remains to be seen how the market is going to take it, and what ultimately gets done is also something that we'll have to watch out for. That's the update. Stay safe and healthy. Have a lovely weekend ahead, and I'll speak to you on Monday.